Hello guys, so there's a massive advantage that just UK investors are able to use, and they actually, turns out, don't really. Today we'll be talking through the reasons this particular advantage is actually very helpful for growing smaller portfolios and growing smaller amounts of cash. Finally, I want to talk about how I personally am using this advantage each and every year to grow my wealth and my portfolio into the future. If you guys get something out of this, then please feel free to maybe give the video a like and consider subscribing to the channel. So let's talk about this advantage. When investing, there are many different brokers or ways to go about doing it. And some people go with the pre-arranged investment portfolios that are on offer by Vanguard and other forms of brokers. And then they obviously can manage levels of risk through financial advisors. And I choose to go a different approach and do the DIY approach, where I choose my investments and actually pick individual holdings. So whatever the case may be, UK investors have a particular advantage, and this is actually the stocks and shares ISA. Now, there are a number of reasons this is such a huge leg up that actually many people don't really appreciate how good of an actual function and scheme this is. So firstly, this is a tax-free savings investment account that we can contribute around £20,000 to each and every year. Whilst most people may find that quite a hard sort of target to actually meet each and every year, putting away 20k can actually be very hard. It can help with tax implications for people that can manage to do so. Secondly, it actually saves on capital gains tax and of course dividends from UK based companies. This is pretty huge for investments that are in the stocks and shares ISA. We're talking about avoiding 15% and upwards on capital gains tax. This is tax that US investors have to pay because they have no form of ISA over there, or they may do. We'll talk about that in a little bit more detail. But in actual fact, it avoids a high tax rate across the board for both dividends and capital gains from selling your investments, and that's pretty big. Thirdly, there is no limit to the withdrawals you can make or the deposits you make as long as it's 20k or less. So effectively, we don't have to get stipulated of a 5-year investment or leave that money for a massively long term. If it has reached our threshold for the amount of money we want to achieve, we can actually take it out today. So there are plenty of advantages. We've talked about a few, but what about other countries? Why is R1, our stocks and shares ISA, so good compared to other countries? Well, when we take a look at this, we can see there is other equivalents or schemes in other countries. So we've got a few here. Now I've tried my best to find ones that are most closely linked, so please forgive me if I've missed some. We can see that the UK at the top with 20k allowance, no capital gains tax or UK dividends tax, and still can get taxed on dividends from foreign investments like the US, which is pretty much true for every form of investment because it is a withholding tax that is taken in the home country. So if we compare our form of investment in a stocks and shares ISA with other countries, we see the ISA comes out quite well. So we have the US and Canada. They have the same levels of deposit, around $7,000, and they can't go over that. Obviously much lower than 20k. And Germany is the worst, although this seems to be more like a pension plan than an actual ISA. I couldn't actually find an equivalent style ISA. But their one is only 2,100 euros that they can contribute for the year. And that's pretty all much the same with the tax exemptions from capital gains and home country income tax. However, the US Roth IRA, alongside the French PEA, has a 5-year requirement. So they have to invest money for 5 years before they can take it out. If they take it out earlier than that, there can be tax implications and they may have to pay further tax. So in summary, we actually look pretty good in the UK. But actual fact, only 6% of UK adults have a stocks and shares ISA, with the average balance being around £7,300. So this is a massive advantage that lots of investors across the world would actually kill for. But only 6% of UK based adults actually use it. And then if you have a stocks and shares ISA and you have the amount over £7,300, then effectively you're beating that 6%, which is pretty impressive. One of the main reasons I see this as a massive oversight on investors' part is that, in my opinion, the average return for a stocks and shares ISA, as we can see here, is just over 9% for around the past 10 years. So that's very good. Obviously, it's not conducive to maybe what will happen in the future, but it does indicate the sort of benchmark that you might try to expect or interpret. That beats out any form of savings account elsewhere, even with the high interest rates that we're seeing at the moment. Moving along to me, I have maxed out my stocks and shares ISA for this year. As we can see here, my contributions for the tax year of 2024 have been completed to 20k, and I can't add any more to this account. But I did the same last year in 2023, and I have a similar aim to do that in 2025. My main goal is not to keep doing this and keep putting money away and live like a hermit. It's effectively to compound my wealth over the next 20 to 30 years. And the best way I can see to do that is to put money in a stocks and shares ISA, where I have the tax exemptions that this massive advantage gives me. As it is, I keep emergency fund and have a long-term time horizon, but some people don't have that. So it may not be for every form of investor, but to me, I think it's a massive disadvantage to not use the stocks and shares ISA. I choose to invest in individual companies. As we can see here, this is my portfolio. But this is an approach I believe offers more risk and wouldn't be something I would necessarily recommend. It's very time consuming to look up each individual companies, to keep up to date with their earnings reports and lots of other things that are happening with these companies. And the downside is that there may be a lot of downside in the future. You may see lots of red with your investments. At the moment, my ISA is up over 10k. But that may not be true with future investments, and it may be down on that tomorrow. So now that I've reached over 50k in my stocks and shares ISA, I'm very chuffed. But if this was down by 10k, I would still be making this video and I would still be telling you guys about it. My main reason is because I do believe it is one of the best ways to invest and a massive advantage for investors. But thanks for watching, guys. I do appreciate it. If you like this video, then please give it a like and maybe consider subscribing. That's all for now. Take care and I'll see you later.